Folks, in another CNBC exclusive right here on Squawk Box, John Hofmeister, the CEO of Shell USA, taking on the peak oil theory.
The peak oil theory has really swamped the world. I mean, God bless Matt Simmons. His assumptions are correct based on his hypotheses, but his hypotheses are too narrow. In other words, he's looking at conventional oil only, and in the industry, we look at unconventional oil as well.
Those were comments Mr. Hofmeister made last week right here on Squawk. And here right now to respond to his comments is Matt Simmons. He's the international chairman of Simmons & Companies. He's also the author of Twilight in the Desert, the coming oil shock in the world economy. Mr. Simmons, thank you for joining us today. What did you think about what Mr. Hofmeister said?
Well, I appreciated on Good Friday having someone bless me.
having someone bless you on Good Friday. He said basically your theories were right if you looked only at certain situations, what was happening in Saudi Arabia, but he said the oil companies, including Shell, have been able to move past just Saudi Arabia. What do you say to that?
Well, I think the grim reality, whether Shell likes to admit it or not, and it's not just Shell, it's the mindset of all the major oil company executives today, is that they're overlooking the fact that they're actually in liquidation. Their production has been in decline for several years. No matter how much money they tend to spend, they just can't get ahead of their decline curves. And their proven reserves are shrinking very rapidly, so it's very convenient to turn to the oil sands of Canada, where a single contract and the ability to theoretically produce that oil for 50 or 60 years can boost your proven reserves. Shell has a project in the oil sands area that they've been talking about now for the last 3 or 4 years, to increase their daily production by 100,000 barrels a day. And the last cost estimates I saw in the press were about $14 billion to do that. So they're still not sure whether they can go ahead. At the prime of Saudi Arabia's oil, 2 wells in North Ghawar produced 100,000 barrels a day.
So you're skeptical as to whether or not the Canadian tar sands actually have that much oil, or whether they can get it out?
Well, they have a vast amount of volumetric oil, but it's just very low quality oil, and it takes an incredible amount of potable water that should be diverted to agriculture, and then natural gas that's also in scarce supply to create enough steam to blow the oil out of the sands and melt the tar, and then you have a low quality oil that has to be upgraded with high quality oil to create synthetic crude. So you're turning gold into lead.
Mr. Simmons, Chase and Trennert, I saw an old friend, I think of yours, Charlie Maxwell, a couple of weeks ago, who tends to agree with a lot of the things that you're saying. And I think one of his contentions, and I'd like to ask you really, is that the larger E&P companies really are kind of losing the innovation battle, I think, as you were suggesting before. Do you have a number of smaller companies? Could you name a couple of smaller companies that are really going to be at the forefront of, I guess, production moving forward?
Well, I was with Aubrey McClendon in Bermuda last week, and Chesapeake has been a fabulous example of a company that basically has achieved double-digit production growth in natural gas, which is harder to do than oil. But they're doing that at the most intensive effort of, they have something like 18 to 20% of the drilling rigs in the United States now drilling these fairly incidental individual wells, but you put them all together and you have the ability to have double-digit growth. But if Chesapeake were basically the size of a major oil company, they couldn't pull it off. So they're benefited because they're small and nimble.
Matt, we also heard from Mr. Hofmeister, who said that he doesn't think there's any reason in the world oil prices should be past $100. We've watched crude oil prices go from $10 to well over $100. Is there any reason to think that those prices will continue to climb, or all the reasons that you've cited in the past, things like China and India, the demand there, is that the reason we've gotten up to 100? Do you expect to see it go past?
Well, unless we have a very severe meltdown in the global economy, I think that we'd be better off assuming that China and India are going to lead the way of the developing countries starting to behave more and more like Japan did in the 50s and 60s. And if that happens, then we need to be prepared for one of two things: either bringing on supply to the tune of a new North Sea every 2 or 3 years, which is impossible, or watching demand outstrip supply, and finally we create shortages. And the shortages could literally create a run on the energy bank, just like we had a run on Bear Stearns.
Where do you think the fair price of oil is right now, though?
It's still very cheap at $100 a barrel. As I continue to point out daily, it's 15 cents a cup. And if anyone in the major oil company community would like to argue that 15 cents a cup for crude oil is an astonishingly high price, I'd like to hear it.
Okay. Mr. Simmons, I want to thank you for joining us this morning.
Thank you very much.
Once again, Matt Simmons.